Hi, this is Jeffrey Kerr Financial Group. Today's Monday, September 15, 2025. So looking ahead, there were two big things on the calendar, but this morning we added a third. Before we get into that, let's look back at last week. So the markets were up last week, Dow up about a little less than 1%. That puts it up at 7.7% year to date. S&P 500, that was up 1.6, almost up 12% year to date. NASDAQ, big winner last week, up over 2% and now up 14.6%. Interestingly, so at this point in time, the NASDAQ 100 is up 4.6% year to date and the NASDAQ composite. So diversification really hasn't worked. You just buy the 100. So, and then finally the Russell only up 0.25% and up about 7.5% year to date. So last week stocks were up, and looking forward now, again, there were two big things on the calendar. The FOMC meeting on Wednesday and options and futures expiration on Friday. But this morning, Elon Musk comes out and announces he bought $1 billion worth of stock. So that's got the Tesla stock up 6% for the day, and has also brought in a bid for a lot of other tech companies and like that. So the stock markets are up today. So Elon Musk today, Wednesday is the Fed meeting, expected to cut interest rates 25%. There are some calls for a 50 basis point cut. I don't think that's going to happen. You've got Lisa Cook at the meeting and all the issues surrounding her, and you've got the friction between Powell and Trump. So kind of an interesting day. But again, by all accounts, the Fed's going to cut 25 basis points on Wednesday. And then finally, options expiration on Friday. Options and futures and options on futures all expire. So it could bring some volatility in, especially after the FOMC decision, if there's any unexpected details surrounding that. And then you've got this options thing, and options and futures expiration on Friday. And just to put it in perspective, there's over $1 trillion of notional value that's going to expire on Friday. And of that, it's 11-to-1 ratio of call options that are set to expire. So there's going to be a lot of rebalancing. And it kind of brings me to the last point I try to make, is that the dealers right now, and this changes all the time, but the positioning is with people in the 0 days to expiration options market, which is becoming a big market and an influential market. Right now, the dealers who sell and buy the zero dated DTE options are now in a position where if stocks go lower, they buy, and if stocks go higher, they sell. Again, this is a dynamic situation and it changes, but right now and for the past week, that's what's been going on. And so you got this kind of a steady grind higher as the dealers suppress volatility, which is at really low levels. So I think it's an interesting situation. It's a setup where, hey, we could hit an air pocket and the markets could drop substantially. That's not a prediction, but the setup is there, and we'll see how that plays out. On Wednesday, I'll try to bring you some data is what happens when the Fed cuts interest rates under these conditions. It's some interesting data that's out there, and I'll share that with you on Wednesday. We'll see you then. Thank you for listening. Goodbye.